you can't really fail at it unless you buy the wrong stock or just get excited at the wrong time.
I've been surprised by all kinds of things in the last 10 years about the economy.
Warren Buffett has always believed in buying stocks when they're a good deal and holding on to them for the long haul. But right now, he's worried that prices are too high. One of the ways he measures this is through something called the Buffett Indicator, a simple ratio comparing the total value of the stock market to the U.S. economy, GDP. When this number is too high, it usually means stocks are overpriced and a market correction could be coming. As of early 2024, this indicator is at one of the highest levels ever recorded. That means Buffett thinks people are paying way too much for stocks, and the market could be heading for trouble. Another big red flag? Buffett is holding on to a record-breaking $334 billion in cash. Instead of buying stocks, he's keeping his money safe in cash and government bonds. This is a huge sign that he doesn't see good investment opportunities right now. When stocks are cheap, Buffett buys. When stocks are expensive, he waits. And right now, he's waiting. While many investors are still optimistic and pouring money into the market, Buffett is preparing for a potential downturn. His message is clear. The stock market is overvalued, and it might not stay this way for long. Warren Buffett isn't just talking about economic trouble. He's making big moves with his money to prepare for it. For years, he's been known for buying and holding stocks for the long term.
It's very hard to move around successfully and beat really what can be done with a very relaxed philosophy. And you do not have to know as much about accounting or stock market.
But now, he's doing something different, selling off stocks and piling up cash. Over the past year, Buffett has sold large amounts of U.S. stocks, including shares in banks, tech companies, and even some businesses he's owned for a long time. This is unusual for him. Normally, he only sells if he believes something is seriously wrong with the market or if stocks are just too expensive to justify holding. Instead of buying stocks, Buffett is putting more of his money into cash and U.S. Treasury bills. These are safe investments that don't lose value if the market crashes.
Well, I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age. I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but
right now, he sees them as a better bet than overinflated stocks. His company, Berkshire Hathaway, is now sitting on a record $334 billion in cash. That's a huge amount, and it tells us that Buffett is in no rush to buy. Another key sign that Buffett is being cautious? He isn't making any big acquisitions. In the past, when the economy was struggling, he used those moments to scoop up companies at bargain prices. But recently, he has said there aren't any good deals out there. This shows that he thinks prices are still too high, even as some people believe the market is booming. Buffett's strategy is clear. Sit on cash, avoid overpriced stocks, and wait for the right moment. He's been through enough market cycles to know that patience is key when things seem too good to be true. Warren Buffett isn't just worried about the stock market, he's also concerned about the overall economy, especially how the U.S. government is handling its money. One of his biggest concerns is the national debt, which has reached record levels. The government is spending more money than it's bringing in, and Buffett believes that could lead to serious problems in the future.
But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right.
When the government borrows too much, it can lead to higher interest rates, inflation, or even a loss of confidence in the U.S. dollar.
I don't think there was any economist I've ever read that talked about negative interest rates.
If that happens, everything from home loans to business financing could get more expensive, slowing down the economy. Buffett has warned that reckless government spending could push the country into a financial crisis if it's not handled properly. Another issue he's watching is corporate debt. Many companies borrowed huge amounts of money when interest rates were low. Now that rates have gone up, those same companies are struggling to pay back what they owe. If too many businesses start going bankrupt, it could create a domino effect, causing even more economic problems. Buffett has also criticized lawmakers and policymakers for focusing too much on short-term solutions instead of making long-term financial decisions. He believes the government needs to be more responsible with spending and make sure the country isn't heading toward an economic disaster. His message is clear. The U.S. economy is built on shaky ground, and if things don't change, there could be major consequences. Investors, businesses, and everyday people need to be prepared for the possibility of higher costs, slower growth, and increased market volatility in the coming years. Warren Buffett's warning isn't just for the government or big businesses. It's a signal that everyday investors should start preparing now. He sees major risks ahead, and those who ignore the signs could face big losses if the economy takes a downturn. One of the biggest risks is a market correction. Right now, stock prices are higher than they've ever been. But history shows that markets don't stay inflated forever. If Buffett is right and the market is due for a drop, investors who are heavily invested in stocks could see their portfolios shrink fast. So what should investors do? Buffett's moves give us some clues. Instead of chasing overpriced stocks, he's holding on to cash and safe investments like treasury bills. This allows him to wait for better opportunities when the market eventually cools down. Everyday investors might want to consider doing the same, keeping some money in safer assets so they have flexibility when the market shifts. Buffett has also always preached the importance of investing in strong, stable businesses. Companies with low debt, solid profits, and a long track record of success are much better positioned to survive economic downturns. Investors should focus on quality over hype, especially in uncertain times. Another thing to keep in mind is rising interest rates and inflation. As the economy slows, borrowing will get more expensive, and businesses that rely on debt could struggle. Investors should be cautious about companies that are heavily leveraged and instead look for businesses with strong cash flow. Buffett's message is simple. Be cautious, stay patient, and don't get caught up in the hype. The economy moves in cycles, and those who prepare now will be in a much better position when things inevitably change. Warren Buffett has been through decades of market ups and downs, and when he issues a warning, it's not something to ignore.
On March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
Right now, he's signaling that the U.S. economy is in a dangerous position. Stocks are overvalued, government debt is soaring, and corporate borrowing could become a major problem. Instead of taking risks, he's holding on to cash, avoiding overpriced stocks, and waiting for better opportunities. For investors, the message is clear. This is not the time to be reckless. Buffett is playing it safe because he knows the market moves in cycles. What goes up eventually comes down, and those who aren't prepared could suffer heavy losses when it does. The smartest move right now may be to reduce risk, focus on strong investments, and keep some cash on hand for future opportunities. While no one can predict exactly when the next downturn will happen, Buffett's actions suggest that a big shift is coming. He has always believed that patience and discipline lead to success in investing. If history is any guide, those who take his warnings seriously will be in a much better position when the economy changes course.
I think the earned income tax credit is the best way to put money in the pockets of people that don't fit well into the market system, but that are perfectly decent citizens and that have made a good bit of the success somebody like I've had with Berkshire or something possible. It wouldn't have happened without the America we have.
What do you think? Is Warren Buffett right to be cautious? Or do you think the market will keep going up? Let us know in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss any updates.